Okay. So we are going to be talking about day trading and how to build wealth and how to profit off the market. But before we get started, I just want to say a few things. The difference between normal investing and day trading, and whether this is something that you should do or whether this is something that you shouldn't do. So just for us to understand what the differences are. Typically, when you either invest in yourself by yourself or through a company like Wealthsimple, and you want to go long, you can actually buy stocks and leave them for 2, 3 months, 1 year, 2 years, whatever. That is fundamentally different from day trading. I'm going to explain what day trading is in a bit. But the thing to appreciate here is that they are very different. One, that is day trading, has a lot of risk associated to it. And also, when you're day trading versus when you're making normal investments, what you look at are really, really, really very different. For example, when you're making normal investments, you generally would like to look at company fundamentals. You want to look at the financials of the company, the management of the company, the product that the market the company is operating in, the competitors of the company, whether that company is in good standing with regulators. These are things that will fit into you making a decision that will keep you locked in pretty much for the short, medium to long term. As a day trader, you really don't care so much about this. And the reason why is because company fundamentals are not exactly that important for day trading because you are actually going to be taking positions and exiting positions 100%, 90% of the time within a trading day. So all those indices that affect long-term viability of a company really doesn't come into play as far as you're concerned as a day trader. Should you go long? Should you be a day trader? Well, it's up to you. There are pros and cons for each one. But I really don't look at it as an either or kind of situation because I think that we can do both. You can go through like a company like Wealthsimple here in Canada or any other investment company that's of your choice, and then make long-term investments. Then it doesn't stop you from also trying to take advantage of the market and doing some sort of trading on your own and learning a few things on your own and profiting from the markets in the short term. Of course, you can lose money because that's the risk associated to it, but it's very possible. I highly recommend that people do both so that you avoid the situation of either or and that I have to choose one. You don't have to choose one. You can actually do both and both of them can work out for you very well. Second thing that I really want to point out is that a lot of times when people talk about day trading, it looks like it comes across as a get rich quick kind of scheme. Honestly, this is not a get rich quick kind of scheme, even though people tend to profit from it a lot in the short term, but it's not exactly the best kind of mentality to go into day trading with because you're effectively going to turn yourself into a gambler as opposed to a day trader or as opposed to a risk manager. So going in with that kind of mentality, it's going to help you formulate very bad habits that are going to hurt you in the long term. So it's the best way, the best mindset to have when you're getting into trading is that look, I am going to do this for the long term, and I am going to put all the energy and effort to acquiring the good education and the good habits for me to be very successful in this. Okay, so having said that, what is day trading? Sorry, I didn't animate any of these slides, so try as much as possible not to read the slides. I know it's very difficult, but try as much as possible not to read the slides. I'm just trying to pay attention to some of the things, to all the things that I'm going to be saying. So day trading is really very simple. The simplest definition of it is that you're buying shares and selling it within minutes, sometimes within hours, with the intention of making profits. You are not always going to make profits, that's for sure. So for you to be able to be a successful day trader, you really have to be very comfortable making losses. But here's the good part: you can control the losses that you make. I know that it might sound a little bit funny, but that's the truth. You can actually control the losses that you make. So yes, we'll start a trading day, we'll buy stocks, we'll sell stocks, and we'll try to make as much profit as possible. And the reason why that is possible, why you can make very significant profits or significant losses, is that as a day trader, you are looking for volatility. You are looking for extreme movements. You are looking for stocks that can make incredible moves in a day. And sometimes these incredible moves can happen within half an hour, or something like that. So I will be sharing some of those practical examples, and I will be sharing some of those things with you in this discussion today. The only thing to be aware of is that today is a Saturday, so of course the markets are not open, but I can show you a few things. So it's not going to be live, it's just going to be a few things that happened during last week, maybe the week before. So yes, as a day trader, we are looking for volatility because that's how you make money. You are going to look for stocks that have the potential to move 100%, 200%, 50%, 20%, 30% in a day. And if you have the right setup, and if you enter at the right time and get out at the right time, you're most likely going to take your profits. And that's great. But not only do we look for volatility, we also try to manage the risk. And that's one of the things that I really, really want to stress. There are several things that I want you to take away from this, but the first one is that you have to think like a risk manager. You have to think like a risk manager. A risk manager always thinks about the upsides and the downsides. And what you want to do is to cap your downsides so that you know exactly how low you can fall and then cap it there. That's what risk management is all about. So importantly, we have to always think about managing risk. There are several ways to manage risk, and we're going to talk about them, okay? We talked about looking for volatility, yes. So the market can be volatile, and believe me, when I say the market can be volatile, the market can be really, really, really volatile. So let me give you an example. This is a stock. Some of us who are in that group, and we talk almost on a daily basis about trading, we all realized that on the 10th of March, there was this stock, AYTU, that made incredible moves in a day. This is really what you call volatility, right? So can you believe that this stock made more than 400% move in a single day? And actually, yeah, just within a couple of hours. So you can see this was around 9:30 in the morning when the stock opened, okay? Opened at about this price to sometime around 2, just before the market went down. You can see that this was a really incredible move, okay? This is 427.9% on that day. So yes, these markets can be really, really volatile. And these are the kind of stocks that we want to look out for, okay? So not all stocks can make this kind of move. There are some stocks like Apple, like Google, like all those very big tech companies that probably would not even make any move more than 5. And that's really, really very high. Most of them are pretty much just inching along, except there is something really going on. But for the most part, they're pretty much just okay and not making anywhere near this kind of move. So if you are in this kind of position and you're able to find this stock on time, then generally, yes, you'll be able to make profits. So imagine that you invested, as an example, let's just say $2,000, and you are only able to get, let's say, half of this move. So that what exactly that means is that your 2,000 investment would have grown by 200% just by trading this stock. So yeah, this kind of things can really, really, really happen. And we're going to be talking about this chart and everything a little bit. But also, they can make moves, very significant moves in the opposite direction. So this is that same stock, that same day, but in the afternoon. Okay, so in the afternoon, it fell by 25% from that time. Okay, and it was a So if you were caught in this position, then I don't think you'll be a very happy failure. Okay. Then by the next day, it had already fallen. Next afternoon on the 11th of March, it had already gone down by 36.5%. So if you were still in this position and you didn't exit your position at that point in time, then you will find yourself 36.5% in the negative as far as this stock is concerned. So this is the kind of volatility that we talk about. It can swing to the upside. It can also swing dramatically to the downside as well. Here's another example. CODX. This was a stock that we talked about a lot early this month. So on the 11th of March, we woke up in the morning and we saw that this stock was making incredible moves. It ended up making slightly more than 100%. So meaning that if you wrote the whole tide, you probably would have nearly doubled your portfolio, your investment in this stock, nearly, yes. So a lot of people were really very happy about people who got into this movement. Were really, really very happy and ended the day very, very satisfied. But then again, this same stock, that same day, also went down 50%. Okay, and sorry, this was the day before. Actually, this is not correct. This was the day before. So the day before went down 50%. Okay, so you can see the 10th of March. So the day before, 10th of March, it went down to about 50%. But on the 10th of March, it went up again. So so when we say we are looking for volatility, these are the kind of stocks that we are interested in. We're interested in stocks that can make this kind of movements within a single day. But because also the movement can be in the opposite direction, that's why it's very important for us to learn how to manage risks. And so that is why personally, whenever I talk about day trading, I highlight two very important things. That we look for volatility because that's the way we make money, but also because we know that volatility can happen in the opposite direction, we have to be very good at managing our risk. Okay, so at this point, before I get into the next section, I'm just going to look at the messages and see if anybody has questions. Again, like I mentioned, feel free just to be typing your questions. I'll be going through and then reading everything. But for now, I can't see any questions. I just can see actually nothing, no questions. So I'll keep going. All right. So yes, a lot of people fail when it gets to day trading. In fact, most people are going to fail. But there are very good reasons why people fail. And the two top reasons are, well, the top reasons are what I've highlighted in my own experience, having done this for about 12 years. So the first thing is greed, okay? And I'm going to be shifting slides here. That's why I don't have it on a slideshow so that I can be shifting slides. So somebody sees this kind of thing, okay? And then says, hey, look, I want to be able to make this kind of money. I want to be able to ride this all along the way. And then this kind of situation can really get you very greedy. So let's say you bought the stock, if you can see my screen. So let's say you bought the stock right about here, okay? And it's going up, it's going up. And let's say we are right about here. What most people are going to do is, hey, you know what? Let me just wait. Let me just make as much money as possible. I think this stock is going to ride up onto this point. Again, because once you're here, all these things are happening in the future, so we don't know. So a lot of people, greed gets the better part of them. But it's very possible that at this point, instead of still moving up, the stock goes down. So then what happens? Okay, so that's one of the terrible things that can kill people. Okay, they are really, really very, very, very greedy, trying to, okay, make as much money as they can. It's not a bad idea, but the thing about it is that you cannot let your emotions get into in the way. You can't let your emotions just affect your trading. On the other side of greed is fear, and there are different kinds of fear. But fear is also one of the very powerful reasons why people fail. Okay, why people fail, because they'll be like, let me give you this kind of example. This is a very typical example. So let's say you bought the stock when it was here. Okay, if you can see my screen, when it was here, and then the stock fell to this point. What typical, what many people would typically do, especially those who are not very experienced, what they will do is that they will say, "Oh man, I'm already losing money. Oh my God, I don't want to lose money, so let me just wait till this thing goes up." But then it doesn't go up. It goes from here to this place. It falls down. Maybe you are like, oh my God, you know what? I'm done. And then you sell. Then you would have made this kind of loss. But if you bought at this point and it went down to this point and you sold here, then you will make some losses, but the losses will be a whole lot manageable than if you sold at this point. And it can typically happen because once you're in a trade, you're so overwhelmed with emotions. Okay, so can we control our emotions? Can we prevent ourselves from being greedy? Can we prevent ourselves from not experiencing fear? The answer to that question is no, you cannot completely avoid being greedy or being fearful. That's part of our nature as human beings. Some people have better control over it, some people don't, but everybody is affected by greed, everybody is affected by fear. Okay, so what you need to do is to have a system in place to help you control these two very powerful emotions. You must have a system in place to help you control these two powerful emotions. Otherwise, you're going to be forming very bad habits and you're never going to be successful. You might make a few positive trades, a few trades, but you're never going to be successful in the long term because you've built up bad behavior. So when we talk about fear, we talk about different kinds of fear. Okay, so first is fear of missing out. What do I mean by fear of missing out? Okay, so let me give you a very typical example. This was, where was that again? This is yep. So let's say this stock that moved this percentage for more than 400% in a day. So let's say you have somebody who bought close to this point. If you guys can see my screen, okay? And then because the person didn't see the stock on time, sees the stock and then says, hey, this guy has made this move in a day. Let me buy this, okay? And because I don't want to move out of this thing because I think that this thing is going to jump. And then you purchase it just because you don't want to miss out. And then everything tanks. Then what happens? You've lost out. Your trade was driven by fear of missing out, and you are ultimately paying for it. But if you have very good risk management strategies in place, which again is something that we're going to talk about down the line, you will look at this point, this stock at this price and say, does this fit my setup? Am I able to get in at this point and still take a profit? If the answer is yes, according to your own risk management strategies, then go in. If the answer is no, then you should be disciplined enough to say, hey, this is not going to happen. I've missed, the ship has sailed, I've missed this move. I will live to trade another day. At least I'm not going to blow up my portfolio. Okay, so that's what you normally do. But whether you'll be affected by fear, whether you'll be affected by greed, we'll always experience those emotions. But if we have a strategy in place to take care of all those things, then we'll be in a much better position than somebody who doesn't. Another reason why people fail is they're jumping around looking for the best strategy, looking at a combination of technical indicators and all that kind of thing, searching for the holy grail, as we usually call it. So there are bad strategies, but there are so many good strategies. The only way, one of the ways to be very successful in this thing is to find something that suits you, that suits your psychology, that suits your emotions, that suits you as a person. And get onto that strategy, try to perfect it, try to move with it, all right? That's really, really, really what works, okay? So instead of jumping from one strategy to another, trying to look for the Holy Grail, there's no Holy Grail. So you're probably not going to find anything. Sometime in the course, we're going to talk about technical indicators, but this is also what makes many people lose out because they're trying to find the perfect combination of technical indicators. Technical indicators are pretty much the things that you look at that will help you, that will guide your decision on how to enter or exit the stock or which stock to even play with in the first place. Okay, so these are the things that we should avoid. At the beginning, once you're starting out, and it happens with everybody, you can just test out different strategies. Okay, is this one working for me? Am I a momentum trader? Am I a scalp trader? Whatever. You try different strategies, but over time, you should find out the one that works for you and stick with it. I'm sure somebody's calling me. I should have put my phone on silent. Sorry about that. The other thing is hindsight bias. Hindsight bias is also something that is really very terrible. So let me give you an example. That this stock moved 427% today doesn't mean it's going to do that tomorrow, as we saw. Okay, it doesn't always mean that. So I'm not going to trade this stock just because it did very well the day before. That's a very bad way to look at things. So people who really suffer from hindsight bias will be telling themselves, oh, this thing made this kind of move yesterday. I missed out this kind of move. It's probably going to make this kind of move today. Let me try and get it. And then you get in and you may experience something like this and you lose money and you're like saying, oh, trading is not for me. Yeah, it's pretty much not going to be for you because you're not doing it the right way, okay? It doesn't mean that stocks that made great moves the day before are not going to will never make great moves the next day. No, that's not what we're saying. We're saying that you shouldn't get into the trade just because the stock made great moves yesterday. You have to actually analyze it and ask yourself and agree with yourself that that stock makes good sense. It's a stock in play for that same day so that you can get into it, okay? Bad risk management practices, we've talked about it a lot. This pretty much means that you're trading as a gambler and you're not pretty much like learning and putting in place strategies to manage your risk. We're going to talk about some of them, okay? Poor education. A lot of people want to get into this thing, want to make money tomorrow, and don't want to put in the time to educate themselves properly to learn this. It doesn't really work that way. And the reason why I put in bracket laziness, because that's really what it is, okay? In this day and age, we all have the resources, we all have access to the internet, we all have access to YouTube, we all have access to everything. So there's really no excuse for us not to be knowledgeable in this. And after this, in addition to internet and everything and all the resources out there, after today, at least you will know that you have access to people who you can ask about different things, okay? And then finally, discipline. Okay, so when I say discipline, I mean you trade today, you don't come again till after 3 weeks, you try to trade again after 3 weeks, or you are not disciplined in learning, or you're not disciplined in doing all the right things that you should do. This is really very bad, and it doesn't just affect trading; it affects every other thing in life. If you're not disciplined, there's no way that you can be very, very, very successful. Now, to summarize this in a way, like the reason why these bad things are really, really very terrible is because they are not one-offs. You are building a very, very terrible habit. And like I've mentioned before, it's that habit that is going to sink you. And if you know anything about human beings, it's really very difficult for us to change our habits. So if you form the bad habits, chances are that you're probably not even going to realize that you have bad habits in the first place. So you might be blaming on other things, but the real thing. And even when you realize, it's going to be very difficult for you to turn around because it's not just so easy to change emotions, right? So that's really why I want to point this out. Bad habits are really very terrible. Bad behaviors are going to make you lose money. And that's why if you haven't started or if you started, it's very important for us to just get into this very early and start building bad habits. Forget about making a lot of money at the beginning. Focus on developing the right habits, okay? Because the right habits are the things that are going to ensure that you are successful down the line. So I'm going to pause a little bit here and see whether there are questions and try to answer the questions. Okay. Um, hmm, some people. Sorry, just a sec. Okay. All right. So let me scroll up here a little bit. So somebody asked, must you buy and sell in minutes? I think that's Dotun Ayodele asking, must you buy and sell in minutes? Okay, so the answer to that question is that you mustn't buy and sell in minutes. Sometimes it could be 1 hour, half hour, it depends. The important thing is that you have your setup in front of you, you know your entry price, you know your exit price, and whatever all those things meet your own criteria, you can exit that trade. Whether it's minutes, whether it's hours, it doesn't really matter. The important thing about day trading is that to a very large extent, you exit your positions within the trading day. Okay. Sometimes, but in very rare cases, you can carry over a trade to the next day. But you have to be very, very, very sure. So when you feel very strongly about a particular trade, you can carry it over to the next day. So a very typical example is there was a day, which one was that? I think it was this CODX, not this day, but there was a day that we were talking about CODX. So we bought CODX the day before, and it was going up, going down, going up, going down. You know, traders were weren't exactly so sure what they were doing, so it was really very volatile a little bit. But the movements weren't so high, and we kind of like decided that this looks like something that has the potential to make a very big run the next day. Okay, so we didn't sell that day, so we held that position overnight, and then the next day, as expected, or luckily, we made a very huge jump, a very huge jump. And then we saw that the opening bell, I think it was very close to the opening bell. I can't remember very much now. And we took very huge profits of this same CODX. So point is that, yes, you don't necessarily have to sell within minutes. So you have to find out what works for you according to the setup that you have. So another question is, for this from Deji. With day trading, I have a major challenge. I'm assuming most of us are working full time. How do you manage your full time job while monitoring the market at the same time? Do you have an app or receive notifications on stock you are tracking? And yes. So I am lucky personally because I can be very flexible with my job. So I usually trade first thing in the morning, usually about half an hour. Some days I do longer than that, but generally from 7:30 to about 8 or 8:15, things like that. Or even before 8, depending on what the day is looking like. So I do my trading in the morning before going to work. But I have all kinds of alerts set up, and that's if I'm still in any trade. But I still have alerts set up, and I'm getting alerts on my phone, and I've set my stop losses. We're going to talk about stop losses sometime shortly. So I've done all those kind of things, and I am pretty much ready to go. So yes, I use the combination of alerts to track stocks that are still in play for me. Honorable is asking, what is the minimum amount that is advisable for someone to start? So I'm going to skip this question for now because I'm going to talk about it later on, okay? Well, anyway, somebody has already answered it, but I have an opinion on that, but I'm going to talk about that later. Rume is asking, how do you manage the losses? Second question, please, I have a question. With day trading, I have a major challenge. I'm assuming most of all, okay, same thing, okay. So I think I've answered that there, but how do you manage losses? Yes, we're going to talk about that as well, briefly. And that comes under our risk management practices, how to manage our losses. Then what is the minimum amount that is advisable? Okay, we're going to talk about that in a bit. Okay, so I think a lot of people repeated the question. So yeah, we'll talk about that in a bit. Okay, so keep adding your questions and I'll be getting to them from time to time. Okay. So, what did I do? Okay, so of course, it goes without saying that if you want to be successful, then you have to pretty much do the opposite of all these things here, right? So you have to fight to agree, fight or fear, adopt a strategy, don't give in to hindsight bias, practice good risk management practices, educate yourself, and try to maintain some level of discipline. But in addition to that, thank you, Rime. In addition to that, there are things that we must never overlook. And this is, I think anybody who has been trading will also tell you this, but this is from my own personal experience as well. Always review your trades because there's a very huge psychological element to trading. It's always important to review your trades at the end of the trading day, okay? And to say, hey, what did I do right today? What did I do wrong? And the reason why it's important to review your trade is that after you're done trading, you are no longer on the psychological hot seat. Okay, you are on the psychological and emotional hot seat while you are trading, and that's the reason why we need to have parameters to sort of guide those emotions. But once you are done for the day, you are no longer on that psychological or emotional hot seat. So you're able to look back and then make honest assessments of your trades, and it's really very important. So you do that. You ask yourself, did I get in too early? How did I choose this stock? Did I get out too early? What were my risk parameters? What could I have done better? Did I analyze the news better? You know, those kind of things. So it's always very, very important for us to review your trades. And as you do this day in, day out, with time, you just become better at it. Okay. I started out, you can do this in different ways. I started out with an Excel sheet, and where I would type what I did for that day, like a small journal. I don't do that again, like I don't use an Excel sheet. I just like mentally review everything. But it's very important for you to do that. There are also systems out there. I think, let me just do this. I think it's called TradeView, if I'm not mistaken. TraderView. So there's TraderView where you can plug in your trades, and then it will help you analyze your trades. I think there are free versions, and there's a free version. So you can actually use this if you want. So the free version, you can plug in 100 trades per month, and it can help you do all these things. So you can journal, but the important thing is that it can generate a report for you. So you look at your trades, your last 100 trades in the month as an example, and then it will help you see where you're making mistakes, see where you're improving. So generally, it's going to help you identify your areas of improvement, your weaknesses, and your areas of strength. So you can strengthen your areas of strength and improve your areas of weaknesses. But it's important to do this. And I think this is not even just about training. In whatever craft you are in, okay, it's always important to review your activities and then find ways to make improvements on that. So this second point answers the question, how do you manage your losses? The best way to manage your losses is always to cap your losses. To cap your losses. Sorry. And I'm going to show you like one of the ways that I use to do this, but you have to cap your losses, okay? And cap your losses to the point where you become so good at being wrong. Because once you learn how to do this, then you don't need to be right 100% of the time for you to make profits. You can be right 33% of the time and still make profits. You can be right 50% of the time and still make very significant profits. But the best thing that you can have as a trader is knowing how to cap your losses, knowing how to get out of trades. That's absolutely important. There's no way to somebody's asking if I covered my what I was covering. I did. Okay. So yeah, learning how to cap your losses, that is absolutely important. Okay. Then balancing your risk. Okay. That is absolutely important. And I'm going to explain what that means in a bit. Yeah, actually, I should do that right now. So I am going to share this if you are still, so I'm going to share two things. The first thing I'm going to share is this Excel sheet. And I don't know if you guys can see this, but let me try to make it bigger, 300%. Oh no, that's too big. 100%. Okay. So this is what I use for, we talked about having your own risk management practices, balancing your risk, and capping your losses. So this is an Excel sheet that I developed to help me. And I use this. I used it yesterday. I used it every day this week. But I just put in a few things here to just use as an example. And this is really very important. I'm going to share this template with you guys free, okay? So let me show you how this works. For most of you, you are going to start with, let's say, 500, okay? 500, okay? So this is how much I have in my trading account. If you are looking at the stock, how should I determine how to play that stock? And because things are moving fast, very fast in the market, you might not have the time to be doing all those mental calculations. So personally, I'm perhaps not that smart, but I need a tool, and this is the tool that really helped me. A lot of you mathematicians can do these calculations very quickly in your brain, but I'm not there yet. So I just use this thing as a guide. So this is always open for me. So how this works for me is that, let's say I have a stock that I want to buy, and then the price is $2.30, okay? And I want to buy 150 shares, okay? What this means is that my total exposure to that stock is $345. $345 represents 69% of my portfolio if my total portfolio is $500. This is a very bad trade, because what you're doing is that you are putting 69% of your portfolio into this one stock, okay? But this is bad if you don't manage this risk, and I'm going to talk about that. But at least I know that on the surface, this is bad, because it's like, it really amounts to putting all your eggs in one basket, or 69% of your eggs in one basket. So when I talk about balancing your risk, this is what I mean, okay? So we have to keep an eye on this, right? So on the surface of it, this looks bad, okay? But is there any way, I'm asking myself, but it's a very good trade, everything checks out, I really want to take this trade, it makes sense for me to take this trade, so how do I cap this risk? Okay, so I'm looking at the buy price of $2.3, I'm looking at 150 shares, and I know that my total exposure to that share is 345. So what I do is, I've been looking at the charts, and I think this stock can get to $3. Or let's say maybe I think it's going to get to 2.8, that I want to sell at 2.8 as an example. So I put a 2.8 here. So what that means is that if I buy at 2.3, 150 shares, and sell at 2.8, I'm going to make $75. Now this $75 is, we've not calculated our commission. So let's forget about commissions for now. So so my gain in this stock, if I manage to buy at 2.3 and sell at 2.8, is $75. But I know that this stock can go down, all right? So I need to cap my loss. And this is where I do it. And I'll say, you know what, for this trade, I don't want to lose anything more than $10. Or you can say, I don't want to lose anything more than $5, depending on you, whatever you want to do. But let's say I don't want to lose anything more than $10 because, okay, for if I'm spending 345, yeah, I don't want to lose anything more than $10. So once I've done this calculation, what that immediately tells me is that I have to sell at 2.23. This is something that I'm buying that I plan to buy at 2.3. So this is going to be my stop loss. All right. This is going to be my stop loss. So stop loss means as I'm entering this trade, I'm putting this stop loss so that when the price gets to 2.23, my shares automatically get sold and I take my losses of $10. Okay. And that's it. I know I've only lost $10 for that in this trade. So that's how I usually do this. But overall, is this a good trade? Well, let's find out. So what this means, if you're looking at all these parameters, what this means is that for this particular trade, I'm risking 0.7 cents, $0.007 to make 50 cents. And it's a good choice because the profits versus loss ratio is 7.5 to 1. Ideal profit versus loss should be 2.1. So this is way more than 2.1. So this is obviously a very good choice. If I'm able to get in at 2.3 and sell at 2.8, or if the trade goes against me, I'll sell at 2.23. So I do this quick calculation and then I go back to my chart and I now start looking at the best time for me to get in at 2.3 or to get at 2.8. Now, in real life, what I'm also always doing is that as I'm looking at the charts, I'm also adjusting this thing. I'm saying, okay, I know that 2.8 is my base sell-off, okay, assuming everything goes according to plan. But what if I'm in 2.9? Okay, I can make $90, that's 9 to 1, that's great. And as stock is going up, I'm actually just modifying this thing. What if I don't get to 2.8? What if I can only sell at 2.6? Does it make sense? No, it doesn't make sense and stuff like that. Okay. What if I sell at 2.4? Does it make sense? It's still pretty much a good shot. I can make only $15. I still have 1.5 to 1. It's no longer the ideal thing for me, but it's still a good choice anyway, because you're still risking 0.7 to make 0.1, but it's not the perfect setup because your ideal scenario should be 2.1. So if you have a situation where you're going to buy at 2.3 and sell for only 10 cents, it really doesn't make sense. Even though in terms of the calculation, you're probably not going to lose much, but it doesn't actually make sense because it's below the ideal profit and loss ratio. So I'm going to send you guys this thing. That's part of the things that I use, and that's one of the things that you're going to get for free. Anyways, but it's always good to bear in mind as you're doing this calculation that there is a $10 commission. So $5 to buy, $5 to sell. So if you remove $10 from this thing, you've only made $5. So it's always good to bear that $10 in mind, depending on the brokers that you're using. Some brokers charge more than $5. Okay. So this answers the question, how do I cap my losses and how do I balance my risk? So everything pretty much happens here. Okay. Then finally, things that we must never overlook is that we always have to make sure that we develop the right mindset. Again, I've said at the beginning that, who is that scratching things around? Interesting. Anyways, so it's always important to develop the right mindset, which is admitting the fact that you can lose money, admitting the fact that you're not going to be right all the time. It doesn't really matter. The most important thing is to be very honest with yourself and always come to a trade with a fresh mindset. Don't carry any baggage from yesterday. Don't carry any baggage from the day before. Just always come with a fresh mindset and then get into that. Okay. Beautiful. So time for me to look at the questions before I get into the next thing. So if you have, I'm going to scroll up now. And yeah, do you advise trading during pre-market when you see volatility or waiting for the market to open? Quick question. Great question, sorry. So pre-market trading can be really very tricky. And the reason why I say that is a lot of things can happen. Um, so you can see things going up in pre-market. It doesn't necessarily mean that it's going to open at that price, except if it happens very close to opening bell. So if you are starting out, I generally advise that you shouldn't do that as often, just because you could really get burnt because there's a whole lot of volatility happening at that point in time. So if you're starting out with a new trader, I usually would advise wait for the market to open. Personally, I trade a whole lot during after the opening bell, and sometimes I trade right off the gates. Sometimes I wait for 10 minutes just for all the crazy people to do their things and a pattern to form in the charts for me to see some sort of consistency before I know when to get in and when to get out. So it really depends. But I'm going to say, as if you're starting out, it's better to wait after the opening bell and then start trading. Okay. Can you trade either way? I'm not sure what this question is referring to, what either way means. So probably Wale, if you can ask that question again and provide more context, I'll be able to answer that. Do you factor broker commission in the exit price? Yeah, I do. I think I've shared this thing. So, who is playing with the screen? There's somebody who is just like scratching a whole lot of things, and I don't think I can take it off. Are you guys? It's really weird, yeah. Somebody's like drawing all kinds of things on the screen. So unfortunately, I'm not able to do that. Said, if you can hear me, can you do this? Can you get rid of all this thing?
I'll see what I can do.
Okay. Um, yeah, it could also be that somebody is watching is on Zoom from his phone and maybe trying to scroll and is mistakenly drawing on these things. Okay. Yeah, so I always factor that in. So sometimes when I'm looking at my access price, I have it at the back of my mind that I'm going to pay dollars, $10 commission. So it always gets into this sometimes. But to be honest, because of the size of trade that I do, $10 is not much. I'm going to make a profit anyway most times. So I really don't think about it. But if you're starting out with a small size portfolio, 500 or 1,000, it's good to bear that in mind. But don't get stuck by that. Don't let that influence your exit price. Okay. All right. So the other question is, do we have to trade through a broker? Yes, because I don't think individuals could have access to direct market. So you always have to go through a broker. And there are so many brokers out there. Some brokers require you to be in the US. Some brokers don't mind whether you're outside the US. Um, there are different brokers in Canada. One of the best brokers is Questrade, but it's up to you to do your research and decide on the broker that you want. But yes, you always have to go through a broker. What platform do you trade on and why? So I have two accounts, a big account and a small account, and I'm going to talk through the platform later on when I talk about getting started. If I don't get to answer that question, please remind me. Does your trade always go through at the stop loss? So yes, my trade always goes through when it gets to the stop loss. Oh, by the way, bear in mind that my stop loss is not cast in stone. I'm always adjusting the stop loss. Okay, so because things can be a lot of things are happening on the way, when you're in a trade. So you're taking decisions in pretty much milliseconds and adjusting your stop losses, adjusting your sell price. But it's always good to have visibility into how much you want to lose. But yes, when the trade really goes against me, you understand, um, I I just my stop loss gets triggered, okay, and it sells off at that price. Okay, but let me give you an example. So when I say that I'm always adjusting my stop loss, let me give you an example of what I mean. So let's say I'm going to bring up this chart again. This happened with CODX. Where's CODX? CODX. Yeah. So let's say I was here. Okay, I got in here and I set my stop loss to this point. Okay, typically if I leave it, what's pretty much going to happen is that my stop loss, once it gets to this point, my stop loss is going to get triggered, and I'll be out of the trade. Okay, but sometimes I have information on a stock, maybe because I've read the news or I've made my own projections, I've seen their earnings, I've read about different things, so I've gone to the regulatory website and I've found some information, and I know that this is going to still climb. So what will happen is that I will adjust my stop loss. So instead of leaving it here, I will take it down maybe to this point. Okay. Just because I know that this stock will probably come down, but it's always going to rise just because I have information and I've made an intelligent guess that it's probably going to rise. So I don't want to be kicked out of the trade because of my stop loss. All right. So I adjust my stop loss so that I'm still in play, even though it has dipped momentarily, because I know it's going to get kicked off. Okay. Let me give you a more realistic example. So I'm going to open up my trade. If you guys can still see my screen, and I'm going to go to, which stock was that again? Let me go through the screen. This guy, let me change, and this guy. Okay. So this happened yesterday. All right. This happened yesterday. What is it yesterday? I thought I had a line on it. Yeah. This happened on the 27th. Okay. So this stock, this was yesterday, 27th. This was real life situation. I saw this stock because it was really gapping up pre-market. So pre-market, the day before it was here. Can you believe it? 0.5. Then it started Friday selling at 2 point something. That's almost 4 times the move. Okay. So of course I didn't see the stock on Thursday, but I saw it Friday morning before the market opened. And I knew that this was going to be a stock to get into just because it has some news, and but the news is not so strong to propel it into the next day, like to carry it over the weekend. It was just good enough to make some very quick moves. So I bought at this price. All right, I think I bought at 2.1. Yes, I bought at 2.1. And again, I think I set my stop loss at 1.8 or something like that. I can't remember. But when this trade was happening, what I did was, it was getting very close to my stop loss. So what I did was I adjusted my stop loss. Okay, I moved out my stop loss. I moved it further down. So it got to this point, it went, it came back up again, it came down, and then it made this move. All right, going to draw a trend line here. So it pretty much made this move. All right, if you can see this move, it pretty much made this move. Okay, and it was when I think I sold about 2.5. Yeah, so I sold this stock at 2.5. So I made 40 cents just on this trade because I bought at 2.1 and then sold at 2.5. Okay, and the reason why I sold at 2.5 was because that was how much profit I determined was going to be okay for me for this particular trade. And the reason why I didn't want to continue further was because I didn't believe that the news was really, really very strong. It was just okay for a start, but a lot of people are not going to be interested to drive this stock further. Okay, so that's why I didn't get beyond this point. And then, of course, what happened? It started dropping, and really dropped. It made a small move here, but really tanked from 2.5 all the way to 1. So it closed out at 0. It closed out at about 1, if I'm not mistaken, 1.06. Okay. So what was the news? Why didn't I write beyond this point? these guys got a contract from, believe it or not, the Nigerian government. Okay, so they got a contract from the Nigerian government for, actually you can see the news here if I'm not mistaken. Yep. So BioKey secures $45 million contract to build secure e-commerce infrastructure across Nigeria and blah, 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 blah. Okay, fine. Not a lot of people are interested in Nigeria. So, but, I know that there are going to be some people, and it came out the day before, just that morning. I know that there was going to be some people who will be very much interested in getting into this thing. So I was like, okay, maybe this is going to rise a little bit. But I know it was not going to, it's not the kind of news that will sustain a stock to keep rising across board. So I got out as soon as I can. And that was exactly what happened. So the thing that was driving it pre-market was actually that announcement. So you can see BioKey up 304% pre-market based on Nigeria contracts. And that was what happened. So this is just an example of the fact that I can adjust my stop loss. So that's to answer that question. Wait a minute. There's quite a lot of questions here. So I think I've lost track of where I was. So yeah, there's a trade. Okay, yeah. So that was to answer Flo's question. So Sherry Olajide, so no matter what, no matter how much you make off your shares, you only pay 5 on and 5 off. Yes, but that's dependent on the broker. So to a very large extent, my broker charges, it's not even up to 5, it's 4.95 to be honest, but it depends. So some trades, most trades they're going to charge you 4.95 on and 4.95 off. But the commissions depend on what you call the ECN that you use. This is getting a bit technical, but so I won't go into that much. So ECN stands for Electronic Communication Network. It's the channel or the network that your broker uses to place stock trades through to the New York Stock Exchange or through to the NASDAQ, to the market that you're trading or that stock is traded. So there could be fees associated with that network, and the broker is generally going to pass those fees back to you. So sometimes you might want to trade a stock and you see that the commission on that is 13.5 or 9.45 or something like that. So it depends, but for most stock, it's going to be 4.95, at least on the broker that I use. So yes, for the last part, $5 on, $5 off. Tunji is asking, is this $10 commission always constant, irrespective of the size of your investment? So if it's, yes, it's pretty much constant. So the only thing that changes the commission fee is the ECN network that your broker is using to route your trade. So whether you're buying 1 million shares or whether you're buying 20 shares, for most brokers, they're going to charge you that commission. Now, bear in mind that the trend these days is that some of these brokers are moving away from commission. So you have the likes of TD Ameritrade, E-Trade, some of these brokers charging 0 commission. So no matter how much you trade, you can trade your life away. They're not going to charge you any commission. So Wale, back to your question. I mean, can you buy or sell? Now let me go up to that other question and see. Yeah, you can buy or sell. So yes, that's the answer to your question, Wale. Which other one? What are the key indicators when researching a stock? Yep, we're going to get to that. And I think I answered a few of them, but we're going to get to that in detail. What trading platform do you use? I use 2 trading platforms. So for my small account, I use Questrade. Can you short sell with Wealthsimple? Nope, you cannot short sell with Wealthsimple. And the reason is because for you to short a stock, you need to have a margin account. And Wealthsimple doesn't support the margin account. So how would TD Ameritrade benefit without charging fees? So they part of the things that they do is that they make money off the account balances that you have, because you are going to have, let's say, $3,000 in your trading account, and you're probably not going to be trading everything. So they're going to make money off that amount that you have, investing it and doing stuff like that. Okay. Can you please elaborate on the 5 on and 5 off commission? So 5 on and 5 off commission means that when you, let me go back to this thing. This is not a very good way to explain it, but pretty much when you buy shares at this point, as you are buying, they're charging you $5 commission, 4.95 to be precise. When you sell at this point to make your profit, they will charge you another $4.95. Okay, so what that means is that as you make any trade, whether you're buying or whether you're selling, you're going to be charged that commission. I hope that answers your question. Okay. Somebody's asking, can you adjust your stop loss on Questrade? If so, how? Okay, I need to log into the Questrade account to be able to show you that. But yes, you can adjust your stop loss on the stock trade, on Questrade. Yes, I'm probably going to show you that. You guys that are further down the line. Which other broker do you use aside Questrade? So I use a broker called, is a US-based broker. It's called Lightspeed Trading. Lightspeed Trading. You guys can see this. Yeah, so this is the other broker that I use. Okay, for those that are asking. Okay. Okay, so I think I've gotten to the end of the questions, so I'll go back to this. All right. Somebody asked, how do you know whatever, like what stock to choose? So to be honest with you guys, everything starts by selecting the best stock. There are literally thousands and thousands of stocks out there for you to trade. So as a day trader, remember that we said that you have to find the stock that is going to be very volatile, that has the potential to make big moves. Okay. So there are certain things that you have to look at to pick out that. But success starts from picking the right stocks. And one of the distinguishing characteristics of the best stocks to be able to trade during a trading day is the stock that has high, above average volume. I'm going to explain to you what I mean above average volume. But above average volume is absolutely important. What that means is that you have, what it represents is that you have a lot of people who are interested in buying that stock or selling that stock or pretty much trading that stock. Okay. If a stock is trading below the average volume, then you can as well assume that generally day traders are not pretty much interested in that stock. So it's hardly going to move. It's not really going to move, and you might not be able to get the kind of volatility that you want. Okay. So in this graph, you can see spikes here, and even here, even though it's red. So what this tells you is that on a certain day in May, another certain day in July, November, June of the following year, this stock actually traded way above its average volume. Okay, it's really very important for you to know this, because this shows you that this is really very important. If a stock is trading below the average volume, like I said, it just means that a lot of people, day traders, are not exactly very much interested in that. Okay, it could also mean that the stock is really controlled by what you call high frequency trading computers, and that's a very terrible thing for you to find yourself in, because you might look at a stock, it doesn't have a serious volume, and you go get yourself in there, you're almost always going to lose. And the reason why you're almost going to lose is that there's no way you can be faster than a high frequency trading computer. It's just impossible. And there's no way that you can access and process information better and faster than a trading computer, a high frequency trading computer. So that trade is almost always going to go against you. So you might see a setup that looks nice, and we're going to talk about setups later. You can see a setup that looks nice, but it doesn't have significant volume, and you can get fooled into believing that that's going to give you a profitable trade. You're almost always going to lose. So the first and most important thing for us to look out for is the volume. So let me show you a typical example of what I mean. Let me go back to this stock. All right. So this was Friday, right? Now look at this guy. This stock, BioKey International BKYI, has free float of 6.8 million. So what free float means is that this is the number of shares that is available for people to trade in the secondary markets. So if you take out the number of shares that the company owns and shareholders have already bought, the remaining shares that is available for trading is what you call the free float. So this stock has about 7 million or 6.89 million free float. Now look at the volume. Can you see? This is a stock that the total number of shares available for trading is 6.989. But on Friday, this stock did 53.31 volume. So that means it traded almost 10 times the available float. So people bought and sold the entire float almost 10 times. If you look at the average volume is 1.5 million, okay? But the volume for that day, of course, did almost 50 times, or slightly more than 50 times, almost 50 times that average volume. So this is a typical example of a stock that is trading way above its average volume. So this is the kind of thing that we really, really like. We really, really love this kind of stock because it shows that there's a very huge potential. Okay. Something that I didn't mention at the beginning is that there are two kinds of day trading, right? So you can go long and you can short a stock. Okay, so it means that if you know what you're doing, you can make money when the stock is going up. You can also make money when the stock is going down, like what happened in this kind of situation. You can actually make money here. Okay, but I'm not going to talk about shorting stocks because it's a little bit complex for people who are starting off. So let's just focus on the long side. So this is the kind of stock that people are very much interested in because we can make a lot of money because it shows that there's a lot of volume, right? Okay. Yeah, so volume, it's really very important, okay? So second thing is that we need to be able to look for the catalyst, all right? So it's pretty much asking, what is the thing that is driving this volume? What is the thing that is making this volume really, really very crazy? You have to be able to know what it is. I have to be able to make an assessment of what that thing is. Okay, so you have to be looking for behind this stock. Okay, I have to be asking yourself: is that news strong? Is the news from a reliable source? So, for instance, regulators, majority shareholders, analyst firms like Jefferies, whether it's coming from the company and stuff like that. You really have to ask yourself that kind of question for you to understand why this is making that kind of move. There are some stocks that we see and we're like, what is driving this move? What is really making this kind of stock go like this? And sometimes you're not able to find that, but it's generally a good idea to try to look for catalysts that are behind the volume. Okay, so that will help you make your own decisions about how to enter, when to enter, if you want to enter, and how long you want to stay in the trade. So again, going back to this example, we noticed that this guy was making this kind of move pre-market, okay? And, you know, the next question was, what's the catalyst behind this kind of move? What's driving this kind of move? And we went to the news and found out that they had this kind of contract from Nigeria. So I made an assessment. I was like, okay, everybody's going to be very excited about this contract, but, you know, Nigeria really doesn't matter in this scheme of things as far as this contract. This is a guy that does biometrics for companies and they build secure commerce infrastructures for just about anybody. Nigeria is a very small market for them. By the way, it's even only just for $5 million. So it's not strong enough for me. So I just took advantage of this small spike and then left it. And naturally the thing just went down because it's not strong enough movement. But let's say you're not sure, you didn't do that kind of research and you didn't find out that this thing made this kind of move. So you're pretty much going to say, oh my God, holy shit, this thing is going to go, it's already going 300% right off the gates. This thing is going to scatter that day, all right? And you buy, waiting for the thing to scatter, and the thing doesn't scatter. In fact, if anything is scattering, is your portfolio that is scattering. So that's why it's very important for you to understand the news behind it. AYTU, why I have this example here is AYTU. The reason why it made this kind of move was because I think they produced the N95 mask. I'm not sure if you can remember. Saidi, I don't know if you can remember. Well, we were very much interested in this stock that day, but I can't remember now. But there was really, of course, this was related to the coronavirus, and it's still related to the whole coronavirus thing. So I think they brought a mask or they did something. But at that time, I remember that it was really very strong. So it was very much, it was something that was understandable, and we're like, yeah, this is strong enough. The same with CODX. When CODX made that kind of very strong move, there was something really behind it that was driving it. And I remember I mentioned that we held this stock overnight at one point, and that was because we understood the news and we believed that the news was strong enough to still drive it into the next day, and that was exactly what happened. Okay, so not only should we be interested in volume, we have to understand what's driving that volume, because that would give you an idea of how that stock is going to perform during that day. Now, if this stock had been a former runner, so let's say what I mean by former runner is that this stock has made a very dramatic move sometime in the recent past, and you see that is, let's say this guy made a move last week, it's showing up in my scanner, and I'm seeing huge volumes, and I'm seeing very beautiful news about it, then it's definitely something that we need to watch. Last week we talked about MFA. There was a stock that we traded last week, MFA. Some of us made a lot of money out of it. Some of us were not that fortunate, but MFA was an example. Okay, it made an interesting move the day before, and then the next day it had some interesting news about. So we're like, okay, this guy is a former runner, so it's something that we definitely need to keep an eye on. And it I think in the morning hours, it really traded very well, but it dropped again in the afternoon hours. And then, of course, news can break anytime. So I don't know whether I have an example of, I think it was TLSA. Let's see yeah, I think it was this guy sometime, if I can remember. Can't find that day now. But I think what happened was news broke lunchtime-ish. Yeah, I think it was this day. So this stock was pretty much just jonesing, within this range when it started out. And then news broke, and then all of a sudden things just went mad, right? It added easily $1.1, and it went mad. So if you look at the trend, okay, you see it made this huge jump. And I think it was about this time that news broke, sometime in the afternoon, that they were going to do something, blah, blah. I think this is a UK-based company that, or is it Chinese? Can't remember. I think it's a UK-based company that is also racing to find a vaccine for coronavirus. So yeah, news can break any time of day. So it's very important for us to bear that in mind. Okay, so moving on. So two things in finding very good stocks to trade. So first is volume. Second, it must have news behind it. The third one is the float. Float, like I mentioned, is the available shares, the number of shares that is available for people to trade. So let me give that example of BKLY that we gave the other day, and now the thing has just disappeared. Okay, yeah, it's here. So we saw that the float was about 6.89, and the volume that traded was almost 9 times that's the total amount of free float that the thing has. So it's really very, very, very important. Absolutely important. And the reason why it's absolutely important is because if you have a stock with low float, then demand and supply effects can cause that stock to move. And that was exactly what happened to this guy, at least at the beginning. Okay. So because you don't have enough to go around and people are pretty much interested in this, so they want to sell it. And that's what was driving the volume. Okay. But if you have a stock with very large float, it's almost nearly impossible for it to make this kind of move, except if there's something dramatic that happened. A case in point was Tesla early this year. So if you look at Tesla, Tesla had way back in the day, Tesla has about 146 million in terms of float. This was yesterday anyway, didn't do much yesterday, but there was a day way back when Tesla was hitting 700, 900 and was making very crazy moves. The volume traded was high, but it wasn't multiples over the free float. Okay, so you can have something like that, but they are pretty much anomalies. But basically, we're pretty much interested in stocks with low float. So high volume, good news, low float, these are ingredients for a successful trade, a successful stock, because these are stocks that can make very, very, very interesting moves. But having said that, I put this thing here because I was out of ideas. But to be honest, anything can still happen. That's the truth. Anything can still happen. But generally, traders understand this and they respect this as well. So here's the cocoa. One of the best ways to reduce your risk as a trader is finding that right stock to trade. Okay, finding the right stock to trade. So let's just look at a very simple example. Let's look at Apple. Apple as an example. Oh, what's going on? So you have stocks like Apple. Okay. Okay. So if you are able to see my screen, it's really very impossible for you to see huge figures in terms of moves. So they can oscillate anywhere between 4, and sometimes even this 4 can be a lot. Okay, and we all know the situation that we are in with the coronavirus, and you know that Apple is heavily reliant on China in terms of manufacturing iPhones and all that kind of thing. So all these things going on in China is definitely affecting their supply chain and of course affecting their stock prices. But even at that, it was just only down on Friday, -4%. So stocks like this hardly make huge moves. They hardly make huge moves. So if you're a day trader and you're saying, let me come and trade this kind of stock, nothing is going to happen. Also, look at the free float. So this is 4.37 billion shares. All right, 4.3 billion shares. There's no way you can have that kind of volume. It's really very impossible to have that kind of volume compared to the free trade. It did on Friday, it did about 51 million shares in volume. Now, a stock, like I showed you, the BKLI that had just 6 million things, did even more volume, okay, than that. So it's part of the things that we just have to be very mindful of. So choosing the right stock is absolutely important. And this is one of the ways that you can significantly reduce your risk, because you can get into bad stocks and you're stuck and you're forced to sell. And most times when you're forced to sell, you're forced to sell at a much lower price than you enter the stock in the first place. Okay, so wanted to talk about candlesticks. I know a whole lot of you here already have experienced some sort of experience trading, so you probably don't need me to start talking about candlesticks per se, but I'm just going to briefly look at them. And I say briefly because I think there are more important things that I want to talk about. Okay, but let me just look at this and see if there are any more questions. What platform is the one that you're using for examples? Okay, so the one that I'm using, this guy, is called Weibo. This is really very good. Boom. Okay. So this is really very good. The reason why I like this company is because it's a new company. I think they started in 2018, so they are relatively very new. So they're still trying to attract people. So they give zero commissions. They have no minimum deposits. Unlike Questrade, that will say you have to deposit $1,000. They don't have any minimum. And once you join, they give you a free stock. Okay. And the good thing about it is that it's pretty much like a tech-based company. So they've emphasized the tech a lot. They emphasize the tech a lot. As you can see, you can do quite a lot of things on here. So just here, let me give you an example. So just here, and if you look at AYT as an example, not only can you see very beautiful charts, you can run your studies, okay? You can run different kinds of analysis on them. You can look at the quotes, look at your time and sales, look at your level 1. They don't have level 2 anyway, but I totally understand them, and I explain what level 2 is later. So you can look at how things are happening in other flows and stuff like that. You can also look at news that are associated with this stock. It's really very important, so it's really very good. They can also give you financials that are associated with that stock. Okay, if there are press releases by that company, they will give you the press releases, insiders, financials. They'll give you all the press releases from that company. And you also get to see some analysis as well based on what certain analysts are saying. So some analysts, as of Friday, we are recommending that this is a strong buy. Okay, so you see a strong buy, 50% of them are saying strong buy. But consume this information at your own risk. You have to be able to make your own independent assessment. But whatever it's worth, these things give you a certain amount of information for you to take a decision. So it shows you different things here. But as a day trader, you're probably not going to be looking at these strong fundamentals. But between the quotes, the news, and the press releases, these are all great. Financials, yeah, you can look at it, especially when they're about to announce earnings and stuff like that. You can do that if you want. The other thing is that it has some of the technical indicators that I love. So you can see all the indicators that you can run on this thing. They're quite a lot. And I'm going to talk about the technical indicators in a bit, but provides you with quite a handful of technical indicators that you can run. And then it gives you the different drawing tools for you to track your support lines, your lines of resistance, your trend lines, and all that kind of thing. And of course, you can modify your stock anyhow you want it. If you want it to look like this, yuck, I hate it. If you want it to look like this, if you want it to look this way, you can do that. So it gives you different things that you want. And you can actually run comparisons. So let's say I want to do AYU versus CODX, and I want to add that as a comparison. Okay, so you can see that, right? And it compares what this stock is doing versus what this counterpart is doing. You can do all those kind of things. Okay, so it's really, really very cool. Then the best part of it all is that, of course, it's a broker, so you have to sort of like sign up, create an account, and do that kind of thing. But it's also free. And that's the good thing about it. And not only is it free, it's real time. It's real time. It's absolutely real time. So it's giving you things as they happen, minute by minute as they happen. So I usually have this, yeah, and you can set how long the intervals that you want to be seeing things. So if you want to be seeing things every 15 minutes, it's up to you. So this candle will be showing every 15 minutes, but as you know, in this business, 15 minutes is such a long time. 5 minutes is even a very long time. So you want actually to be on the 1 minute window to be seeing things as they happen minute by minute. So that's also the good thing about it, is it's free. And I think that's because they're relatively new and they're trying to get people. But then the thing about it is that you can't actually make trades with this guy because for you to have a broker account with this guy, you have to be in the US. If you're outside the US, you can make trades. But hey, who cares? If you download this and you are running it, and it actually has an app, iPhone app. I don't have an Android phone, but I think you should have an Android app as well. But it has an iPhone app as well, and the iPhone app is really, really very good. You guys can check it out and download it right away. But even without opening an account, you have to sign up anyway, but it won't allow you to fund an account if you're outside the US. But even without funding an account, you're still able to have access to these tools and then still do a whole lot of things. Naturally, you can build your watch list, use your screeners, and I'm going to talk about that in a little bit. Okay, so that's why I really recommend this guy for you. Oh, by the way, did I mention that he also shows you he has full extended hours trading? So all your pre-markets and post-markets up to a point, he also handles that for you as well. And you can trade not only US markets as well. Let me show you that. I think the screeners, let's say screeners. So you can actually trade different, you can do US, China, Canada, and I think you can do a whole lot more. You can do different sectors. So I picked US, so you're seeing all the sectors that you can trade in. Amex, NYS, NASDAQ, and so on and so forth. So it's really, I think it's really good for just for analysis. There are different options as well. So you have E-Trade, I think it's E-Trade. E-Trade is also another broker that has very good charts. Yeah, but again, it's not free. Even though they do zero commissions, but you have to be in the US to have this account, and there is a minimum trading balance that you have. You also have e-Signal. This one is really very expensive. They're really very good. They have, I think, I really don't want to say they have the best, but they really have very good chatting applications, but it's really very expensive. It's really very expensive. So their chatting applications can even run algorithms, but I don't know you want to be paying $176 a month or $335 a month for chats. I don't know that you want to be doing that, but if you have the money to do that, well, it's up to you. But it's really, really very good, but also very expensive. So personally, I wouldn't recommend that for any of us here. It's just too expensive for my liking. What other questions? So, do you have access to how many people are waiting to buy or sell a particular trade? Yeah, so that's what you call the level 2. Yeah, so level 2 shows you that kind of information. It shows you how many people are on the buy side and how many people on the bid side and how many people are on the ask side trying to buy a share at a particular price. But level 2 is it doesn't come freely with most brokers, and the reason is because you have to pay for access for that. So it's only when you have access for level 2 that you can see that kind of information. Questrade supports level 2, but you have to pay for it. Which platform do you get up-to-date information on news on a desk? So again, this guy does it a lot of times. This guy pulls information from, I think they have an agreement with Benzinga, with Yahoo Finance, with CNBC, and with Bloomberg. But yeah, so pretty much that. But they also have access to company fundamentals as well. Sorry, company press releases as well. But yeah, so they have this, and this is from the press release, as you can see. And that's also one reason why this guy is good. But apart from that, you want to look at, sorry, you want to be able to look at Bloomberg, CNBC, Benzinga. Benzinga is really very interesting. So let me see. Yep. So they give you access to news and stuff like that. I have the app on my phone, so I don't have to read everything. So I just set alerts and it gives me news on the things that I'm interested in. So let's say, for instance, I don't know, I'm interested in Tesla. Okay. And then it's going to give you, apart from the fundamentals, but here's the most important part for me. So it gives you the headlines and the press releases or everything that has to do with Tesla and associated companies or the same company, everything that affects Tesla one way or the other. So it gives you that. Some of the things, so there's Bazinga Pro. So Bazinga Pro, we have to pay for it, but normal Bazinga is free, right? So if you also sort of like, so if you want to pay for Bazinga Pro, well, go ahead. I don't recommend it for now at the beginning because I'm of the school of thought that once you're starting out in something, you have to watch your expenses and begin to make those expenses as your portfolio grows. So you don't need it at this point in time. Okay, so but the other good thing about Bazinga is that I know that a lot of traders look at Bazinga. So and they adjust their positions based on information that they are getting on this thing. So if you are not also looking at it, you might find yourself stuck in a trade that might go against you. People pay a lot of attention, unfortunately or fortunately, depending on how you look at it. People pay a lot of attention to analyst reports. One of the analysts that I really like is Jeffries. I hope I'm getting the thing very well. So Jeffries, these guys is an investment company, but they have very solid equity analysts. All right, and over time I've had to learn this thing the hard way because these guys, whenever they publish any ratings on any stock, the thing makes dramatic moves. So a typical example is we talked about CODX. Okay, so the reason why CODX crashed the day that what's going on? CODX. So the reason why CODX crashed the day that it crashed and never recovered after we traded it that day was because Jeffries. Let me see what I can find it. Maybe it's gone past because it happened early this month. So Jeffries released their ratings on this stock and pretty much downgraded it. So they downgraded this guy. And immediately that news came out, the stock just went belly side up, you understand? So that's also one reason why. So, but you can't be checking out what's it called? Can't be reading all the analyst report all the time. So here gives you a very nice summary just for you to know what's happening. But I always look at Jeffries because these guys, I think they know what you're doing. Okay, so other question is, what are those different line colors? Do they represent different stocks or same stock at different times? So I'm going to talk about that in a bit when I talk about technical indicators. Which broker do you recommend for starters? I recommend Questrade if you're in Canada. And the reason why Questrade is really good is because, first of all, if you're in Canada, that's the best you can use. If you're in Canada, there are better brokers in the US, obviously, but unless you have somebody who's going to open that account for you in the US, you probably won't be able to do it from Canada. So that's bad. What is backtested? Okay, so backtested is pretty much like a way of if you're testing a new strategy, want to be able to use previous market information to test that strategy and see whether it's something that you might want to adopt going forward in the future. So backtesting, as the name suggests, gives you previous information on the price actions of a stock, and it feeds that into the algorithm or the strategy that you are trying to test out, and then you run some analysis to see whether that's giving you the kind of results that you want. It's a very advanced concept, so I'm pretty much not going to say anything further on that here. Are you subscribed to Benzinga? No, I'm not subscribed to Benzinga. I just use the Benzinga that I subscribed to is the Benzinga Pro, right? So I just use the normal one that is free for everybody. I have a free information system. If anybody is interested in PM me, okay, that is fantastic. But Questrade is not free, right? Nope, it's not free. Okay, so that's all the questions for now. If you have more questions, continue to drop them in the comments and we'll see. So let me just briefly, very, very briefly talk about these candlesticks. So candlesticks represent price actions at a certain time. That's all that it is. So candlesticks just shows you what, let me use this guy. So candlesticks just shows you what the price is at this time. So you can see the times at the bottom here. And I'm on the 1 minute chart, so you can see the times here. So candlestick just tells you at this time, this was the price of this stock. At this other time, this was the price of that stock. So that's all that it tells you. But there are certain things to notice about, let me make it larger. There are certain things to notice about candlesticks, okay? So what typically happens is that you can set up your candlesticks to have any color that you want, but the commonest colors are green and red. So green says this is the price action at this time and is a positive price action is going up. Red just says this is the price action at this point is the negative price action and the price is coming down. So the way to look at a green price candlestick is bottoms up, and the way to look at the red candlestick is top bottom, because it shows that this price is dropping at this so time. The price dropped from this to this, and this price represents all that has happened with this stock within 1 minute. If today was like a weekday and trading is going on, what you will notice is that this red will be going up and down, going up and down, going up, and after 1 minute it will drop to the next thing here, to the next line here. So this will represent how the stock has moved within 1 minute. If you are looking at this in a 1 minute window, if you're on a 5 minutes window, it just shows you how the stock have moved within 5 minutes. But again, if you're day trading, you want to be here. Okay, so that's what candlesticks are really all about. As you can imagine, candlesticks are lagging indicators, right? So they always tell you what the price is after the fact. So that's what happened. So now, if you look at this candlestick, you notice two things. So you have what you call the main body, the one that is shaded, and then you have what you call the doji, the wick, or this single line on top and this single line below. Okay, they are very important. Okay, so what this represents is that actually at some point the price got up to this point within that 1 minute. It actually got up to this point, but it came down. Okay, but at the end of the day, majority of the trade happened within this body of the candle. So this represents the price action. But at some point, very briefly and very momentarily, the price got to this point and got to this point. And that's same for the green window, for the green ones as well. So why is this weeks? Why are they very important? Why it's very important is because if I see this green wick, what it's telling me is, so this one, if you guys cannot see my screen, so why this thing is really very important is that I know that some people, that the price at some point got to this point, okay? Meaning that it was actually going down, right? So even though overall, by the time you look at all the trades that happen at all the prices within this 1 minute, this was the average price, okay? It moved from here to here, but at some point, somebody wanted to buy or sell at this point, somebody wanted to buy or sell at this point. So the price actually touched this level. So the longer this bottom thing is, the more likely it is that this guy is going to come down, because people were experimenting with this bottom part of the price. So that's how I interpret this, okay? And this is also another example. It's not always the case, but it shows that most likely that's what's going to happen. I have a better way of sort of like predicting this, and I'm going to talk about that later when I get into indicators. But generally, you want to pay attention to this thing because it sort of gives you an indication, or there is like an indication of how things are generally going to move here. Okay, but yes, that's all you need to know about candlesticks. So And that's all I want to talk about candlesticks now. You can read further on candlesticks, okay? Interesting. Let me just take a sip of my tea. Great. So, technical indicators. Technical indicators are almost always lagging indicators. So they show you things when those things have actually happened. So the reason why I started out with this point is that you don't have to put your life on technical indicators. They are just there to help you, to guide you in making decisions. They give you an idea of what's going to happen based on what has happened in the past. So it's not any kind of oracle, that's going to tell you exactly 100% sure what's going to happen in the future with that stock. No, it just gives you an indication. Okay, and there are so many technical indicators out there. So on this, we go as an example. If you look at indicators, you're going to see quite a bunch. Okay, now there are quite a whole lot. But my advice is, yes, it's good to look at all the indicators, understand what they are, but don't get yourself bogged down by indicators because they're just going to lead you to unnecessary confusion. They're going to complicate your screen, and you probably wouldn't know what exactly you want to look at because everything is happening in seconds, and you might be so confused seeing so many things at the same time. So it's always good to keep everything clean, keep everything simple, and use just the technical indicators that you are comfortable with, technical indicators that suit your own strategy and that are going to work for you. Also bearing in mind that they are almost always lagging indicators. So having said that, there are two technical indicators that I use all the time, and I'm going to explain that. Somebody asked the question, what are these funny lines here? So those are my own technical indicators, and I'll explain what they mean. As a matter of fact, I use largely just two technical indicators, and one of them is what you call the moving average. So the moving average simply calculates the average price of that stock over a period of time, and that period of time is very specific, okay? And that period of time is measured in candles, all right? So I give you a very typical example. Let me go back to this thing. So one of my moving averages is, one of the lines I use is this line, okay? So this line, at this point in time, this guy gives me the average price, as you can see, is 9 point something. So at this point in time, it gives me what the average price of this stock is over a set period of time. And I'm going to explain what that means. But why do we use moving averages? The reason why moving averages are important is because it gives an indication of what the trend could be. Okay? This somebody posted it because I'm going to read that later. So it gives an indication of what the trend will be in terms of price, and I will explain what that is. And it's important to understand that traders pay a lot of attention to moving prices, to moving averages. And when certain things happen on moving averages, traders sort of will adjust their positions immediately. And if you don't know that, you probably will be caught unawares and caught with your pants down. And that's why people also lose money, right? Because you don't know, you are not the person trading alone. Your trades are always affected by what other people are doing because trading is a zero-sum game. You make money because somebody has lost money, and the money that you lose, some people are making it. Okay, it's always a zero-sum game. So you have to be aware of what's happening. And traders who know what they're doing always look and respect these moving averages. So there are two types of moving averages. There's the simple moving average. The simple moving average just calculates the average price over a set period, number of period. And what I mean by number of period is over the last candles. So these are called candles. So you can have the average. So this thing will represent the average price over 1, 2, 3, 4, or X number of candles, depending on how you set it. Okay, is a simple average. So it just looks at the price over this last. So let's say, for instance, I have, if the set period of time is, let's say, over 1, 2, 3, 4, 5 candles, then this price, the average price, simple average price at this point is going to be the average price over this last 5 candles. So the plus and the minus, you average everything together, divide by 5, and you get the average price here. But you also have what you call the exponential moving average. So exponential moving average is the same thing as the simple moving average, but it places a whole lot of emphasis on the most recent price action. So it weighs, it's like a weighted price moving average. So it gives heavier weight to the most recent price action. So if the most recent price action is weighed down in the negative, then that's going to pull down the average price because it considers that more, it weights that more. And obviously that's very, very important because you want to be looking at that as a trader because the risk price actions is almost everything. So you want to be able to make sure that your moving averages are really very, very, very much influenced by the price that you're looking at. And that's why I never use the simple moving average. I always use the exponential moving average. And I explain how I use it. So there are different types of moving average. There's 10 EMA, 20 EMA, 50 EMA, whatever EMA you want. So this means that, remember I said that moving average is like the average price over a set period of time. And the set period of time is calculated by the number of previous candles. So this 10 EMA means this is my exponential average, but I'm looking at only the last 10 candles. This means that I'm looking at the last 20 candles. This guy means I'm looking at the last 50 candles. And that's exactly what I use. So if you look at this point, you see that I have EMA 10, EMA 20, EMA 50, and I color-coded them separately so I can understand what's going on. So this orange line is the average price, exponential moving average over the last 10 candles. So what I'm essentially doing is that I'm looking at the prices over the last 10 candles and using that to calculate my moving average. The turquoise line is the EMA over the last 20 candles, and then the green line is the moving average over the last 50 candles. I also have moving average over the last 200 candles, and that's just because I want to be able to understand the trend, okay? For this guy, you can set it here. So let me go to the settings. So you can say I selected my EMA. You can choose whichever ones you want. So you can have 5, 10, 20, 30, 50, 200, whatever. But I chose the 10, 20, the 50, and then the 200, and I can give them different colors that you want. So whatever the color. So I choose my color. I'm not going to change it because I'm used to this already. But you can set whatever color that you want, and it will reflect here. Okay. So that's how I operate with my moving averages. Now, why a moving average is very important. Let me explain to you why they're very important. Typically, if prices are, if the stocks is the prices of the stock is above, so I'm using this 10 EMA, 10 EMA. If the prices of the stock is generally above this EMA, okay, then it means that this stock is most likely going to be, is most likely in an upward trend. So it's most likely going to continue, okay? Because remember I told you that traders look at this thing and they're going to respect this thing. So most likely a lot of traders will start adjusting their position on the long side. So that would generally try to drive up the stock, okay? Generally. If it's below this guy, then it means that it's generally on the downtrend. And again, traders are going to start adjusting their positions, and that's why you start seeing things fall, okay, typically. So that's how it usually happens. And the further away it is from this line, then the further away, the further below is going to fall. So it's really very important. But like I said, these things are all lagging indicators. So they're just there to guide your decisions. So what this thing means for me is that if I look at this price, so this stock is above the 10 EMA. So what I'm most likely to do when I'm considering my setup is that I want to buy close to this EMA as possible. So I rather buy here than buy here. And obviously I rather buy here than buy here because this guy is so far away from the EMA and this guy is very far away from my EMA. Okay, because this guy has happened. Okay, so because the further away you're buying from the EMA, then the thinner your profit margins will be. If at all you're going to make profits. Okay, and then the further away it is, it means that very shortly there's going to be a down trial. Why? Because at this point, people will start looking at taking their profits. So somebody that bought here would like to sell here, take his profit, and so on and so forth. So again, these are lagging indicators, like I keep saying. They don't predict anything for you, but they are just guidelines. Okay, so that's why I use my 10 EMA and I pay a lot of attention to this 10 EMA. It's really very important for me because it helps me decide how I will set up, where I'll buy and also where I will exit. Okay, there's a 200 EMA which I hardly use, but the only reason why I have it here is that if I see a stock trading below my 200 EMA, is a no-no for me. Immediately, I'm not even going to think about it. Uh, Unless there are stronger indicators, like there is serious news behind it. Okay, unless there is serious news behind it. Now, having said that, though, remember that I mentioned something about indicators. What was that again? I can't remember what it was. But these are lagging indicators, so anything can still happen. Somebody dropped in the comment that, but your moving average strategy won't work well in this March period of COVID-19. To an extent, that is half true, and that is also half not true because these prices are pretty much determined by other investors who are buying and selling. Okay, and it's pretty much going to be dependent on how they behave. And a lot of traders pay attention to this thing and adjust their positions accordingly. So it's true because overall price and everything is dependent on what's happening in the global macroeconomy. And COVID-19 is something that we cannot ignore. There are people making money from COVID-19, there are people losing money. It's something that we cannot ignore. So to the extent that it affects the overall behavior of traders, yes, it affects how much attention that you can pay to this kind of indicators. But even outside COVID-19, you're not going to put your life on these indicators because, like I said, they are just lagging indicators and they should be guidelines for you. Okay. So that's how I use these indicators personally. Then the other indicator that I generally use is what you call the VWAP. So the VWAP is like EMA, but instead of being weighted by the most recent price, it's weighted by the volume. So back again to the chart, underneath here, you're going to be seeing this bar. So these bars represent the volume. So obviously, and this is my VMA. The VMA is the one that is in deep orange. So this guy that I'm highlighting at this point in time. Again, for the VMA, you can decide whatever you want to do here. It gives you the description, you can decide what it is. So this guy looks, his VMA 14 means that it looks at the volume weighted average price over the last 14 candles. Okay, so it calculates the life of the candle, but it weights everything um, um, based on the volume. So obviously you have lower volumes here than you have here, so that's going to actually drop the price a little bit. Okay, so and it doesn't matter whether the volume. So volume is green volume means that is positive. The price is going up by this volume. Red volume means that a lot of people are selling. So this is the number of shares that have been sold. This is the number of shares that have been bought. Okay, at that time, at this minute, at that minute. So you can see this is my 1 minute window. So this is at 9:59, this is at 10, this is 10:01, this is 10:02 because I'm on the 1 minute window. So I'm looking at what's happening minute by minute. So this guy gives you the average price, but instead of weighting it based on the most recent price, like the EMA, it weights based on the most recent volume. Okay, and there's a reason why that one is also really very important. But personally, I don't pay much attention to it. I just want to make sure that my prices are trading closer to this VMA, and that gives me an indication of how to set up my entries and my exits. And when I say entries and exits, I mean this guy. So at what price am I going to buy? At what price am I projecting to leave? And what is my stop loss going to be? So my determining these things, the things that help me make these determinations are obviously these technical indicators that I've set up to help me decide on what setup that I want to play that fits the strategy that I'm using. So how is that going to affect you? You can start out with these indicators, but obviously your setups might be different. You might even decide to use totally different indicators. It's up to you. Again, it's all about finding what works for you. It's good to experiment with the different types of indicators, but eventually you're going to have to decide on what works best for you. So this is over the years, this is what I found that works best for me, and that's what I'm using. Okay. Or finally, this is really what I want to pay a lot of attention to. So if you're on Questrade, you're probably not going to see this. I don't think Questrade has it. But there's something called time and sales. Okay, so time and sales, unlike unlike the other indicators, so they look like this. Unlike the other indicators, they show you. Yeah, I pay a lot of attention to this time and sales, and that's why I'm saying you always need to have your eyes on the ball. So I'm always looking at this guy. And what this thing shows you is that it tells you the number of shares that have been bought or sold at a particular price at a particular time. So when I took this screenshot, it was like 5:48 p.m. My time, which is obviously not the, by this time, it's not New York time actually, so this is my time when I took it. Actually, let me show it to you here because it's better for me here. And I'm going to expand it here. So I go to quotes, and I go to this guy, and I detach with jet. I'm just going to open it up here. Okay. So what this guy does is that it shows you at this time, so and so number of shares were bought. If it's green, it's bought. If it's red, it's sold. We are bought, and we are bought at this price. So at 5:59:40 seconds, 200 shares were bought at $9.14, okay, of this stock. Okay, so this is absolutely, absolutely very, 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 very important for me. I'm very close to the time and sales. It also shows you like a very brief analysis of what's happening, in terms of the different prices. Just select different prices around the one and shows you that. So here you have more people selling than more people buy at this point. So what I'm typically doing is that I'm looking at, and if you notice, you are seeing the total volume here is like, it's a lot. So this tells you that these are pretty much like guys like you and I. Somebody is buying 100 shares. Somebody even bought just 10 shares. Okay, so that at this price, so the person spent only $91. So this guy bought 8,000 shares at 9.15. Okay, so in terms of size, average size, okay, well, not this guy, sorry, I don't mean this is not one particular person. This is just the total number of shares that have been bought at that price, but it could be 10 people that made this, bought these total shares. It could be 3. So that's the reason why this guy is different from the level 2. Level 2 will show you each individual, how much volume individual is buying or selling. This just shows you the collective number of sales that have been made at this price at this time. So this shows that if you look at the numbers, they are not a lot. So this probably suggests that they are pretty much individuals like you and me who are buying small caps like this. So, but why this is important is that as the trade is going, this thing will be moving very quickly like this. But if I start seeing more volumes here, right? Like maybe I see 10,000, 100,000, 1 million. I hardly see 1 million anyway, but I've seen 1 million at one time. And I was like, ooh, maybe an institutional person is coming in, because it's hard to believe an individual is going to buy, or 5 or 10 people are going to buy 1 million shares. So it's very rare to start seeing 100, 200, and all of a sudden you see 1 million. That means an institutional investor has stepped in. And I like to see that, because if an institutional investor is taking a huge position, it means that there's something that I don't know, or it means that these prices are going to go up. So this is a very good way to guide when you get in and when you get out, because you start seeing a lot of greens. It means that there's going to be a drive up of the price, because a lot of people are trying to buy. Okay, so they are pushing the price up. If you start seeing a lot of reds, it means that people are started selling. And what's naturally going to happen is that the prices start going up, because people are trying to get out of that trade. But let's say you don't have this, then you are blind, pretty much. You don't know what's happening. Okay, you pretty much don't know what's happening. So this is the closest that I have to sort of like predicting what's going to happen in the future. So if I see, and this is happening pretty much in seconds, so if I see that there's a lot of things, red, green happening, I know that if the green happens for a long time, then there's going to be a wave of red coming, because people are going to try to sell to take their profit. Because don't forget that we're dealing with small caps here, and we're dealing with day traders who want to take their profit. So that gives me an idea that if I see a lot of long greens, then very shortly there's going to be a red coming, and that red might be sustained dependent. Okay, but yeah, so this gives me a very, very good idea. We are past time, but if everybody's okay with that, I'll just go on for a little longer, if that's okay. All right. So yeah, so that's how you find that. So these white ones are also showing that people are. So this white ones also shows that people are buying. That's what it shows. It's not sales. These are buys. But there's a very interesting thing about this white one. It shows that you have very close levels of almost the same amount of purchases and sales at this exact price. So that's why it's white. But if you have more buys at this, because at this point people are buying and people are selling, okay, right? So but if you have more total buys, then that's why it's green. If you have more total sales, that's why it's red. If you have just about the same number, that's why it's white. As far as this Webull is concerned, though, there are other brokers who show you different things. So you have to understand how the time and sales are displayed in the other brokers that you use, but typically they are used this way. There's somebody asked a question about, just give me a sec. I'll just pull up the question. I want to show you guys something. Just a second. Okay. I don't know what you guys can see this. This is not really, really very clear. But somebody was asking, is this different from the level 2? So while this is what the time and sales look like, the time and sales just shows you at this particular time, this is the total number of sales and at what price. The level 2 shows you a deeper information. It shows you how many bids, what's the quantity sitting on the buy side and on the sell side. So on the bid and on the ask. On the left, you have, typically on the left, that's where you have the bids. On the right, that's where you have the asks. So the ask has the sellers, the bids, and the buyers. So if you look at this guy, what it means is that there's somebody who wants to buy 1,000 shares. So these are represented in thousands. For this broker, these are represented in thousands. So this means that somebody wants to buy 1,000 shares at this point, at this price. Another person wants to buy 4,000 shares at this price. Another person wants to buy 218,000 shares at this price. Another person wants to buy 218,000 shares at this price. So this shows you the individual bids that people have. So these are the buyers, the bids, making bids. What you have on this right side as well is ARCA, ACB. These are what you call the ECS. So these are the different routes. Okay. So this is a direct market route, the NASDAQ route. So this broker, you can have, you have somebody who is using this route and wants to buy 6,000 shares at 7.8. You have 1%, 1,000, somebody on this route that wants to buy 1,000 shares at 7.9. So this is what the level 2 looks like. Of course, this is very important because this shows you what the demand is looking like. On the other side, this is the ask price. So these are the guys who want to sell. So what this means is that on this route, you have somebody who already has the shares and wants to offload 4,000 shares at 7.52. Okay. So problem is that if you start seeing huge numbers on the sell side, so that will tell you, or looks like a lot of people want to dump these shares, right? You now advise yourself accordingly. If you start seeing huge numbers on this side, bigger numbers here than you have here, that means a lot of interest. You have a lot of people who want to buy at prices that are close to what somebody is selling at this price, okay? And that will help you advise yourself accordingly. So what that means is that, for instance, somebody here wants to sell 4,000. Let me just use something very interesting. Okay, so somebody here wants to sell 2,000 shares on this guy, wants to sell on this route, wants to sell 2,000 shares at 7.5. But another person on this route wants to buy 6,000 at 7.82. Okay, so that gives you an idea. So if you have more volume here, it already tells you that at this point in time, this is a buyer's market. Buyer's market means that there's probably going to be, there's more demand than supply. So the prices are probably going to go up. If you see more volume here than here, it means it's a seller's market. Okay, meaning that you have a huge number of sales and no demand. Okay, and these guys are going to be scrambling to sell. So the prices are going to average down. Okay, so this gives you an idea, but if you don't have access to level 2, you probably won't be able to get this extra level of information and you won't be able to take a more better decision. The level 2s are real life market information. They're not delayed, they're always live. So that's why most brokers don't give it for you free. You have to pay for it. You have to pay for access to level 2. So to answer somebody's question, is level 2 free on Go? No. You have to, it's only when you open an account and you fund the account and pay for it, that's when you get access to this. But for the free one, you don't have that. Okay. So that's how level 2 works. Of course, if you have access to this, it gives you a whole lot of information, right? As you can see. Time and sales just shows you the volume as you for the total volume, but it doesn't give you an exact number of how many people are sitting on the buy side, how many people are sitting on the sell side. So you wouldn't know whether a lot of people are trying to sell or a lot of people are trying to buy. This tells you that, and this is as trades are happening, these things are continuously moving, but over time. So at the beginning, it's very difficult to read because a lot of things are happening, but over time, it gets easier. So the closest that you have, if you're not paying for your level 2, is going to be this time and sales. But you have to do the quick thing of, oh, if I'm seeing more greens, it looks like a lot of people are trying to buy. If I'm seeing more reds, it looks like a lot of people are trying to sell. But you only see it when it has happened. So it's just based on the number that I can project. But this guy, you have access to it milliseconds before it actually happens, because it shows you have more guys trying to sell or you have more guys trying to buy. Therefore, this is a buyer's market, or therefore this is a seller's market at this point, a given point in time. And this is how likely the price action is going to be. And therefore, this is how I'm advising myself to enter or to leave. So that's the benefit of this guy. Okay. Let me see whether there are any more questions. With the entire universe of stock available, how did you narrow down to the ones that you track? Yes, that's Flo. That's a very good question, and that's one of the last things that I'm going to talk about. how you know. Okay. So finally, this is it. This answers your question, and this is pretty much the last topic that I'm going to talk about before, well, second to the last topic. So, how do you pick your stock? Okay, so you typically pick your stock by building a watch list. The watch list just says these are the stocks that I'm trying to, that I'm interested in. But what goes into your watch list will come from your scanner. So that's why I really recommend that you have to set up your scanner. So if you look at this guy, I have different scanners set up. So actually, there's a difference between screeners and scanners, and I'll tell you what the difference is. Many times the um, people use the two terms interchangeably. But let's just say for Weibo, there's really no much difference between a scanner and a screener. They pretty much act in the same way. So I have 1, 2, 3, 4. On this Weibo, I set up 4 scanners. So these scanners look for big move farmers. So this is just big pharmaceutical companies in the United States that are making big moves. Okay. This is penny farmers. So these are like um, pharmaceutical companies that are small cap pharmaceutical companies that are making big moves. So this is like penny stocks, but that are the pharmaceutical sectors that are making big moves. Penny grabbers, this are all. So this is all the stocks and in MX, Nasdaq, and the New York Stock Exchange that are penny stocks, but that are making big moves. This is all technology stocks that are priced between $3 and $40 that are making big moves. And the reason why you see big move is because part of my strategy is trading momentum. Is like gap trading. So like I'm interested in looking for stocks that are like making big moves. Okay, so I have pharmaceuticals here because we're in the period of COVID-19 and you have a lot of pharmaceuticals that are trying to find cures, vaccines to the COVID-19 virus. And of course, any news around them will make their price action to move. So this was where we discovered the likes of CODX. So let me just do this price trades. I usually do from beginning to top to bottom. So this is where I discovered the likes of BPTH, blah, 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 blah. So once you set up this kind of scanner, okay, it's going to, these things start moving pre-market. So all these things will be changing, but I usually come to percentage change and do top to bottom. So it shows me the biggest move. It arranges it in descending order. So on the ones making biggest moves to the ones making the tiniest moves, right? Within a specific range that I've defined. So this is how flow, to answer your question, this is how I find my stock. So I come pre-market and all these things are moving, but it's always arranging it in this order, okay? So let's say this is 6 o'clock Calgary time. So that's 1.5 hours before the market opens and this thing is happening, okay? And I say, oh, BPTH is number 1 on my list. Okay, and BPTH already pre-market is moving 32%. Wow, that's interesting. What's making BPTH move? I'll double click on it. Okay, and I'll go to news and I'll say, is there anything that I don't know that is happening? What's happening in news? No, okay, I can't see anything here. Let me go to Bazinga. Let me go to Yahoo Finance. Let me go to Bloomberg. Let me go to CNBC. Let me go to Jeffries. Let me go to the company website. Let me see what I can find that is causing this big move. And of course, I'll look at the volume as well. Okay, and I'm like, what's happening here? Okay, volume is almost 7 times the average volume. Oh, okay, that's interesting. This is actually something that I'm interested in. Okay, so then after doing that, I go back to my thing, my screeners. How did I get here again? So I go back to my screener. What? Oh, no, sorry, here. So I go back to my screeners again and say, okay, let me look at the second one. So as things are happening, these things will be adjusting and trading. But sometimes you can have one that is on number one for a very long time. Like it's already trading 300%. It's making 300% move even before the market gets open. So what I do is that if it's not already on my watch list, I come here, I add it to my watch list. Okay. And I say add to my watch list as an example, add to my watch list. Then I can set alerts and price. So above price, if the price is above, I don't know, whatever, let's say $6, send me an alert once a day. Okay. Sorry, once per minute. I do this. So even though I'm looking at it, I've already set alert. So the reason why I usually set alerts is that maybe if I'm looking at this guy and this guy has gone to do, maybe I open this guy this way, and that BPTH has gone to do something, okay? Then what happens is that then what happens is that I get the alert if there's any move, depending on what I've set on the alert, so I can easily go back to my watch list where I have the BPTH. Let me just arrange it again in terms of this. So I can go back to my watch list and find BPTH and then say, oh, what the heck has happened there? Let me go and look at the stock share. What's happening? Oh my God, I can't miss out on this action, blah, blah, blah. Let me analyze it. Then I come here and say, okay, I'm looking at the price. I'm going to enter this price. I'm going to buy so volume. I'm going to exit at this price. I want to lose only this thing if I'm going to make a loss. And this is going to be my stop limit price and all that. So that's actually what's happening. I can't take a picture of my screen, but I have two big screens. So like I have a lot of real estate, so I can see so many things at the same time. But that's just my own personal setup. So that's how I find stocks, because from what I have on my screen. Now, here's the most important thing. What you see here depends on the settings that you have. And that's the second thing that I'm going to give you guys apart from this. So this is the first one that I'm going to give you guys. Second thing that I'm going to give you guys is my settings for my stock for my scanners, for the strategy that I'm using. I'm using a momentum strategy. So meaning that I'm interested in finding stocks that have high volume, trading at above average volume, that have low floats, and also have good news. So first of all, I have to see which ones are making the right volume. Then I'll go and check whether they have news. So I have a way of setting. So if you look at this guy that we are looking at, right? This was I was looking at Farmer before. So if you look at this guy that I was looking at for this screener, I have different settings. So if you go to modify, you see that there are different settings in here. So whatever setting you put here is going to determine what you see here, okay? So for instance, I put price indicators from 0 to 10. So that's why you're not going to see any stock that is more than $10 here. If you look at the price, then I'll put something like percentage change 5 to 500. You're probably never going to get 500, but who knows? We saw something that did like 427%. So I usually have 5 to 500. So if you're making any move, if the price is changing between 5 to 500, it's going to pop up on my scanner. Okay. Then I put the floats. I put the sector because this is like my penny stock pharmaceutical. So I limited it to limited it to only pharmaceuticals. So that's why I chose only pharmaceuticals. But I thought I chose healthcare as well. Okay, I didn't choose healthcare. So this is just pharmaceuticals. Yeah, pharmaceuticals and medical, blah, blah, blah. Then I'm only interested in seeing stocks in the United States. I'm only interested in seeing stock in all the three exchanges that are trading. So depending on the settings that are here, that's what you're going to see. If you want other, you can make a whole whack of things here. Okay, you can decide to show stocks that have only a strong buy from analysts. You can always decide to show stocks that have that marginable on the long and the short side, or shortable, or whatever. Whatever settings you have here, they will determine what you're going to be seeing here. Okay. And of course, it can give you the name so that you can recognize it again when you go to your screeners. So that's the name that I gave it. So every morning I come and do this, and I do this, and I do this, and I do this, and I'll be changing the percentages just to see, so that it arranges everything from top to bottom. So that I see on the number one, like the ones that are making the biggest move. So I'm going to give you guys my settings for my screen. And this is something that a lot of people don't do, but I'm gonna give you that. So there's a question. Oh, so AA is saying, what's happening? Why is the screen going dark? Or is it only me? Nepa don't find me come Canada. AA, are you able to see the screen now? If you're able to see the screen, just type here so that we'll know that you are fine. Okay. So somebody asked the question, do you prefer Weibo platform to Questrade IQ platform for analysis? Or yes, I do. I think for small capital, I do, just because it gives me a lot of flexibilities. Now, this is the scanner for Weibo. There are different kinds of scanners. I don't always use this scanner, so I have one other one that I use, which is Trade Ideas, but it's really very expensive. That's the problem with that. So Trade Ideas uses artificial intelligence to bubble up stocks for you. But let me just show you so that you know that it's not the cheapest of all things, but it's affordable anyway. If you start, it's not that crazy, but once you start making profits, decent size profit, and once you start trading a little bit often, then I would recommend this as well. Or if you can have 2 or 3 people that can come together and purchase a plan, and overall individually the price is going to be smaller. So this amounts to $6 per day, which is the premium version, and you can do a lot of things. But $6 a day looks like it's small, but this is what you're going to be paying every year. So that's like 2,226 and 68. If you're on this plan, there's also some other plans that are a little bit more manageable. So that's 228 a month. Okay, so you can decide, but this is obviously when you've started making a whole lot of money. But at the beginning, there's it's always good to use the ones that come free. But this one gives you opportunity to sort of like, it gives you much more parameters to play around with. So you can check it out. It's called Trade Ideas, trade/ideas.com. There's another guy that I've been looking at for a very long time, but that guy, I haven't purchased it yet. So by the way, I have these Trade Ideas anyway, so because I find it very useful. So I use a combination of those. So there's Scans, I think it's called Scans. These guys, they're really, really very good. So the good thing about this guy is that you can, if you go to scans.com, you'll see what I mean. So they use parameters, but you can define rules to show you what kind of stocks that you want to see. So if you're looking at my screen, it's doing all kinds of things, like all kinds of things. So it gives you a whole lot of parameters to play with. But the best thing about it is that it incorporates technical indicators in the parameters of the scanners, in the settings, which is something that is not very common. And this is what gives this guy a very significant advantage, because you can build in your technical scanners and use it to decide on what stocks comes up, depending on your strategy that you're trading. So it's something that is definitely worth checking out. And when I say worth checking out, feel free, because there's a free trial, and I think it's for 7 days. So you can download it and try it out for 7 days. It's all features inclusive. It has level 2, which is also very good. So remember how we talked about level 2, you have the bid side, you have the ask side, you can see exactly how many shares are being, the sizes at the different prices at the different channels and the different ECS networks routes. So it gives you level 2. So this is something to also evaluate I've been checking this out for some time, but I haven't paid for it. Why? This is why. So this guy gives you 99 per month, for 79 per month for just the scanner and the news, 99 per month for the scanner and a few other things, and the complete package with level 2 depth. This one gives you level 2 depth as well. It's 149 per month. And this is USD, by the way, so I don't sorry, I don't think it's cheap. But again, feel free to try it out and put it somewhere in your diary. So when you start making a lot of money, you can decide to go for it. And you don't need credit card for you to try it out, and it's all features free. Yes, and for the 7-day trial. So put in your email address and try it out. But I've tried it and it's really, really very good. I like it a lot. It takes a little bit of getting used to, but I really, really, really like it a lot. But I think it's very expensive. Yeah, so that's Flo, that answers your question, and that's how I do that. So I'm going to send you guys this. I'm going to send you guys my scanner settings for you guys to play around. And then the last thing that I want to deal with, because we are really out of time, is so you've listened to this, you've decided that you want to do this thing. How do I get started? So this is a very simple process that I usually recommend to people. I use this process myself way back in the day, and it has helped me a lot. And I'll share the reasons why it helped me a lot. The first thing is to study, because based on what we've done, what we've shown around, like you can see that you need to know quite a bit of things for you have to know what you're doing for you to have any hope of making money. Because if you don't know what you're doing, then it essentially amounts to serious gambling. And you don't want to be gambling. I always say that at the end of the day, you don't want to be gambling. This is not gambling. This is not, you have to be really very deliberate about this. And that's why it requires you to study and study and study. But one thing is having the technical knowledge. Another thing is being able to understand your emotions and being able to deal with your emotions. And one way that helps you begin to have access to that is to try out all that you've learned in a simulated account. So get an account and start playing around with it. Questrade has an account that it gives you have a trial that you can use for 90 days and try out stuff. Why is this showing my internet connection is unstable? That's weird. So it gives you 90 days to try out stuff. That's Questrade, but I would recommend either you download the Questrade or you download this guy. The only difference between Questrade and this guy in terms of testing out is that with this guy, he has a simulated account for paper trading. So it can give you an amount of money, blah, blah, you can use and do your paper trading, okay? Your paper trading account. But then the only difference again is that this guy gives you stock prices and quotes in real time. Questrade is going to be 15 minutes delayed. The 15 minutes delay doesn't really matter when you are trading in a simulated account, but you want to trade in as close to real life conditions as possible. So that's why I would recommend that you use this guy. And if you start getting familiar with it, that helps a lot. But if you're going to be using Questrade to be doing your trading, then it's always good to also to play around with that, have a feel of that as well, because so that you can start getting comfortable with when you start doing your real life trading. And these first two processes will take you, if you're serious about it, will take you anything between 2 to 3 months. Some people do it in much less time. But once you're done with these first two steps, then I always recommend to start out with a very small amount of money. And when I say this is the reason why I recommend starting with a small amount of money, it's small enough that if you lose that money, it's not going to be the end of the world. So it actually helps you fight against fear, okay? Because if you start out with 3,000, 4,000, 5,000, then whatever you do, you're always going to be afraid because you don't want to lose any of that 4,000 or 3,000. But if you start out with 500, if you lose it, it's not going to be the end of the world. So it's helping you manage your fear right off the gates at the beginning. Second thing is that it helps you not to be greedy, because with 500 shares, there's only a limited amount of, with $500, there's only a limited amount of shares that you can buy. So, and there's only, you probably would even make anything more than $50 per share, even if you make up to $50 per trade. I'm sorry, per trade. When you start out with an account that is this small. So it helps you control your greed, and it forces you from the very beginning to start learning the good habits, which is what is going to be very important for you if you really want to be successful down the line. So that's the reason why I recommend starting with something small. Now, I've put 500 to 1,000. The reason why I have 1,000 here, which for a lot of us might not be too small to experiment with, is because if you're going to open an account with Questrade, this is the minimum that you need to have, 1,000 CAD, but it boils down to less than that in USD. By the way, these figures are in CAD anyway. So if you're going to open with, Questrade, the minimum is 1,000. Let me just find it here. I think I have it. So if you have different self-directed investing, I have trading platforms. So this is Questrade. You can go to their website and read a lot more. They have a mobile version, they have the web version, and they have their own desktop application called the IQ Edge. Okay, so you can read about it, read the different kinds of account that you can open. Okay, you can open your TFS account, ISP, margin trading, blah blah blah. Okay, we can look at that, go to their pricing, see the different things that they have. Okay, for self-directed, for active, just go through the website. But I can tell you that if you're opening a self-trading, self-directed account, whether it's TFS or margin account, the minimum is $1,000. So that's why I have $1,000 here. But I usually, I recommend it's still small in the scheme of things. But if you lose $1,000, it might pay you small, but again, that's not the end of the world. And at the end of the day, it helps you not to give into fear, and it helps you manage your greed, because there's only so much that you can do. And then as you begin to trade, you're gonna lose money. Everybody loses money. But if you use the risk management principles that we've discussed here, then you can control exactly how much you're going to lose. And that's the beautiful thing about it. So when you're starting out, your portfolio might look like this. Let's say if you have 1,000. Okay. So you can start playing around with different things that you want to do. Okay. But you can control exactly how much you're going to use by putting your stop trade. And that's very fantastic. It's in Questrade, you can put in your stop trade, just like many other brokers allow you to do this, except for Wealthsimple. Wealthsimple has a lot of restrictions. So Wealthsimple trade, that is, has a lot of restrictions. So as you start trading, honestly, I can't emphasize this enough. Start building the very good habits that we mentioned about in the beginning. So I'm just going to go back up again to the beginning, which is why many people fail. So stop doing all these things. So these first two slides are really very important. So if you start fighting against fear by having by using this, because you're going to experience greed, you're going to experience fear, but you have something already set that gives you a very solid guide before you enter a trade, that really, really helps you find these two things. And stop searching for holy trail, stop this, do this, do this, that. So once you start doing all those things, right, you start doing what works for you, and you figure out like what you're stronger, what needs to improve, and then after a while, you find your own rhythm. It's always it's like swimming, right? So they're going to tell you kick and do it, but the thing about swimming, if any of you swims, is that at a point in time, it's really not so. Yes, all those things that they tell you help, but at some point in time, you find what works for you when it comes to swimming. So it's the same thing here. Like at the end of the day, find what works for you. Okay. Something might work for me and may not work for you. And the reason is very simple. We are different. We have very different psychological, a lot about psychology involved, right? So there's no say if somebody tells you, oh, there's no psychology about it involved, no emotions involved, and it's a big lie. It's like saying in reality TV that there's really that those people are living their normal life. There's no way you live your normal life if you have a camera in front of you. It's impossible. It's not possible. So there's no way they are just possible. You have to. So you have to find what works for you. So we are 42 minutes over time, and this is what I've got. But how you go from here, these are my steps. How you go from here, find material, study. I recommend we go for this guy. Then these two things will take you anything between 2 or 3 months earlier, shorter if you are very dedicated to it. Then get to this point and start doing small trades. A lot of us, I know a lot of people that open accounts in very immediately and started doing stuff. But again, there's a process, and I usually advise people to go through that process. So your focus for the first 5 or 6 months shouldn't be on making a lot of money. Your focus should be getting into the groove, getting into the rhythm, and forming the right habits, because that is exactly what's going to make you successful at the end of the day. Last question here is, are there specific materials you recommend for studying? Yes, I have a book that I read eventually, not at the beginning, because at the beginning there wasn't any book like that, but I've read it, and that's the book that I always recommend to people. It's called How to Day Trade by a guy called Ross Cameron. And if you read that book, it will be very familiar, because a whole lot of things that I talked about here, uh, um, pretty much what the guy talks about. So there are different materials out there, but you have to bear in mind that those different materials are written from the perspective of the author himself, from his own trading strategy, his own trading style. So while the technicals are going to be the same, but the underlying uh, psychological pathways and the risk management strategy and all those kind of things are going to be different, because traders are different. But I have one that I always recommend, and the reason why I recommend that book is because it emphasizes risk management a lot. Because as a trader, you can become a risk manager or you can become a gambler. It's up to you. Okay, you can become a gambler. So this guy goes through the route of having you focus on the serious fundamentals of being a responsible risk manager. So I'm going to recommend that book. Maybe that's the third thing that I'm going to share. So my settings, my calculator, and then the book. It will be a package. Now, I don't know how yet I'm going to distribute it, but maybe I'll give everything to Dr. and he will send it to you guys' emails. Okay. I don't see any questions, so I guess everybody is very happy or very bored. I don't know, but we are 45 minutes over time. I probably ate into you guys' lunch. So sorry about that. Me hope you guys really found this thing very useful. This is pretty much the beginning for everybody, and I'm also I'm also reading a lot. Also reading a lot because things are changing. So yeah, we can't stop learning. Just like anything in life, we also have to keep uh, learning. So once again, I'll thank Dotun for and the guys behind this that put it together. Thank you so much. If you personally feel like you have knowledge that you want to share with other people, talk to Dotun about it. I'm going to end the way that I started, which is to say there are a number of people who made this possible. Please, you guys should get listening on this. But there's Dexteritas, very cool accounting firm. If you have a small business and you're looking for an accountant, please check them out. If you need a massage and need to visit a physiotherapist, please check this out. Yeah, if you're a small business and you're looking for social media productions and stuff like that, please check out Future Moments. These are guys that are doing amazing work. And I hope you guys took note of the different links that I shared. Bezinger, TraderView, Scans, and a whole bunch of other guys. So please, you guys, um, yeah, check all those things out. I'm just going to hang around for 2 minutes to see whether there are questions. And I know that, let me also say this. So I know that you probably won't have all the questions today. But yes, feel free to, I'm on the group, so many of you will have my WhatsApp numbers and everything. So feel free to message me. I'm going to be answering. I'm open 24/7. Okay, not 24/7 because I go to bed sometimes. So, but like, yes, if you have questions, send me questions. Feel free to call me. I'm really very much open. I'm going to be sharing things that I know. A little bit of a personal thing. I don't say this a whole lot, but let me just say, I really encourage people to do this because this is something that has the potential to make you a lot of money in the long run. It's not a get rich quick scheme, like I have emphasized, but it's something that gives you a lot of, is a very fantastic skill to have because it can make you financially independent over the coming years if you stick with it and you're consistent and you're just showing up, okay, and you're doing this. Is something that is very good. I've personally benefited from this, and if anybody that knows me know that I talk about this and I encourage people a lot. Yes, you can make losses, but I hope I've been able to share how you can control the losses that you make. So you remember that we mentioned that you have to be really very good at losing money. I'm sorry, you're not losing money. You have to be really good at being wrong because you're going to be wrong. In fact, as a matter of fact, um, just a couple of days ago, some of the guys some of the guys here will remember. So there was a time that there was a stock that I said wasn't going to get up to $2. And not only did he get up to $2, he passed $2 and he went up before coming down. So if was I wrong? Yes, I was wrong. Okay, yeah, because we're all going to be wrong. Everybody's going to be wrong. But you have to get very good at being wrong. That's the whole thing. So if you follow some of these things that we talked about, you only need to be right 30% of the time for you to make a lot of money. You don't need to be right 100%. So that's what I would really recommend. Okay, thank you so much. I don't know what the next thing is. Said, if you're on the line, Dotun, if you're on the line, do you want to mute yourself and then say something? I don't know what the next part is. If you guys bribe them enough, they might organize another session. Who knows? For another thing, or maybe for this one, a continuation. Because yes, there are some certain things that I didn't talk about, like shorting stocks, because they're a little bit advanced, but this is just the basics to get everybody started. Okay. Hey, Saeed, do you want to say anything? Dotun, do you want to say anything? Okay. Looks like everybody's happy. So, well, guys, thank you so much. And have a very lovely weekend. Try to make the best use of this quarantine period and learn something fantastic. Learn something new. I'm going to sign off now. So thank you so much. Stop sharing my screen and have fun. Oh, sorry. Somebody said, can I share the screen on why people fail again? For you to screenshot it, yeah, that's fine. You can see that if you want. I don't know if this is what you're asking for. Oh, I don't know why this is popping up. Yeah, so if this is what you're looking for, yeah, you have it on the screen right now. Okay. Can I quickly go through the names of the different sites again? Okay. So you have TraderView for review your trades, which is very good. You have Bazinga for news on stocks, which I highly recommend. You have these guys for, I don't know, this guy might be a little bit too off for you if you're starting up at the moment. Scans 2 might be a little bit too way up there if you're starting up at the moment. I did talk about Webull. This is the one that you may want to download. I really find it very interesting. So that's this guy that we're talking about here. So yeah, so that's that. The other sites that I go to, CNBC, Bloomberg, you may want to check them out again. All right. Okay. So, yeah. Sharif, hope that works for you. Okay, thanks. And that means you got it. Okay. And again, I'm going to put up this site so that you can go, if you're running a small business, go get a very fantastic accountant for your business. This is amazing. You guys can do this. All right. Okay. I didn't do this, so let me look at this slide. I'll say thank you for spending this time with me. Hey! Okay. All right, guys. I'm gonna stop sharing and I'm gonna get out of the call. So thanks a lot. Bye, everybody.